Bitcoin sitting right on the line that decides its next big move, and the trap today is obvious. Chase the breakdown too late or buy the bounce too early. I'm Chris. Welcome back to Bitcoin Whale. Today is not a prediction day. It's a risk day. The chart is telling us where the trap is and where it stops being a trap. Here's the map before we draw anything. Bitcoin is around 59,623. Below it, the bear door is 57,834. Above it, bulls need a 4-hour close through 62,363 before I take the bounce seriously. Quick accountability note. Yesterday, I called the bear trigger at 61,069. Bitcoin closed at 59,622. That level broke, so the bearish scenario is live. Now we update the risk, not the story. First, the volume map. The value area low is 61097, and that's the important line most people ignore. When price loses that shelf, bounces back into it, and fails, the market is usually accepting lower prices. That level is 61,097. Subscribe if you want these decision levels mapped before the move, not after the candle already teaches the lesson. Now the trend line. Descending resistance comes into today at 62,363. That matters because a wick into resistance is noise, but a 4-hour close above 62,363 would tell me sellers are losing control of the structure. That level is 62,363. The old floor is the uncomfortable part. The lower channel boundary projects near 64465 now, and price is nowhere close. So I don't call this a healthy pullback. I call a market trading under its old support. That level is 64,465. That is the trap warning. A lot of traders see Bitcoin near 59,623 and think cheap bounce. But if price can't reclaim 61097, the bounce is just testing broken value from underneath. And I don't want to short in the first flush either. Late shorts get squeezed when they press after the easy candle. I want the trade near my risk point, not in the middle of emotional damage. Let me drop to the 1 hour for the entry, because the actual trade box has to be tighter than the 4-hour story. On the 1 hour, today's short idea is simple. Entry at 60,000, stop at 60,600, target at 58200. That's 3.0 RR. If Bitcoin is already far below entry, I don't chase it. If it tags entry and rejects, then I have to find risk. The reason I like that structure is boring, which is usually good. The stop is tight enough to prove the idea wrong fast. The target is close enough to be an intraday trade, not some dramatic swing call pretending to be precision. If 60,600 gets taken out cleanly, the short is wrong. I don't argue with it. The worst trading habit is turning a failed intraday setup into a personality test. Back on the 4-hour, the bull case is not complicated. Bulls need a 4-hour close above 62363. If they get that, the upside scenario opens toward 77269. Until then, the bounce is guilty until proven otherwise. The bear case is just as clean. A 4-hour close below 5783.4 confirms the next leg lower, and the bear target from today's map is 42,928. I don't need to love that number. I just need to respect the trigger. That level is 57,834. The no-trade case is the one nobody likes, but it's probably the most useful. If Bitcoin chops between 60,000 and 61097, I sit on my hands. That zone is where both sides can look right for 15 minutes and still be wrong by the close. So my plan is dry on purpose. No chase under support. No blind bounce buy. I only want the short near 60,000 with 60,600 as the line that proves me wrong, or I wait for the 4-hour triggers to do the talking. If this saved you from chasing the first ugly candle, a like tells me to keep making the risk map this direct. Trade the level, not the mood. I'm Chris, and this was Bitcoin Whale.